Good morning and welcome to Trading with Larry. It's Larry Benedict, joined by Eric Shamalov. Hope everybody had a good weekend. Good trading week last week, I think. I mean, I felt like for me it was a decent trading week. A little bit of up and down, which we usually don't see. Monday, Tuesday, Wednesday, record highs, market back on a record, at the end of the week pretty much. And here we sit another week coming into the end of the summer. There's about two more of these. Very, very low volumes across the board. But stuff, obviously, I'm not going to get crazy into the bubble, but I will say that I was reading Sam Altman basically compared AI bubble right now. He says we're in a bubble pretty much. This guy is the master of AI. So if the master of AI is saying that we're in a bubble that compares to the dot-com bubble of 1999, 2000, it gets me a little worried. And it gets me a little worried because the IPO market, which is really where these companies raise capital, have the ability to grow, et cetera, has been shut down for the last 3.5 years, even when the stock market was running up. So, what's interesting is now they're bringing anything that has AI in the name or AI or crypto coming public at crazy valuations. We'll take one. Company called Bullish. All you have to do is have Peter Thiel involved and have Bitcoin and something else, and they want to pay crazy for it. It ended up having a $15 billion market cap on day one. It's back down to about seven, probably not even worth three, but the market is in froth land, which is, you know, it's leading me to believe that there's, potential issues coming forward. And, you know, like we've talked about ad nauseum, no public customer wants to sell. We'll touch on Palantir, traded up to like 188, 189 last week, trading 174. At 174, they want to buy more. At 164, they're going to want to sell the mother load. So keep an eye on that. Keep an eye on the fact that we're coming into the end of the summer. And it's not going to be as easy with people around to get these types of gains. We're going to need some clear news. But the market is definitely different than it was. So what tariffs did in April, it panicked everyone, and then they realized that Trump was not real and this stuff was never going to happen, which still to this minute of this day no one knows what the tariffs really are, which is really hurting businesses. And I want to touch a little on the PPI again at some point, but really, the level of
I'm actually going to pull it up because I wanted to get to that as well. But go ahead. I'm just going to pull up a chart of the PPI, which is actually more predictive of where the core PCE is going to be than the CPI, and the PCE is the Fed's preferred measure of inflation. And when you look at this chart, Larry, the white line there, that's your producer price index, which we had last week, which blew everyone away. And as you can see from this chart, with a 2 month lag, the PCE should be following in the next couple of reports. So,
Yeah, but let's talk about the PPI. I don't even think we closed down 1%. So, I mean, it didn't really shake anyone. My point is that after tariffs in April, when everyone panicked, they believe right now that the market is Teflon to anything. It's funny because the market rallied multiple times last week when Trump announced that he was going to meet Putin, and then they have this meeting. It doesn't even last a couple of hours. Okay, he flew his entire crew in for this meeting, with the flyovers and the planes and the this and the that, and really nothing came out of that meeting. Obviously a great meeting, but nothing came out, and Putin is not going to stop. And now he summons Zelensky to the White House to try to move this thing along. with the people in Europe joining him because Europe is right there. It's their, it's really their war. They're right, Poland's, many countries are right there in the EU, so they're very concerned. And Trump literally said this morning that he wants him to cede everything, and no NATO, cede this. So I guess he's on Russia's side right now, and I would say that it's shocking. It'll be shocking um, to see how this outcome really plays out today. And I think it may be more meaningful for today's trade. I know it's probably later in the day than people think, because I just don't think Ukraine is going to cede the land that they want, and Russia is not winning this war for sure. They're winning maybe, but they're not going to ever win because they're not going to get enough land. So there's a lot of wild cards in the market. Market is very, very mellow. But I do see breaks, in these high flying stocks like Palantir, is down to the low. It's still, listen, honestly, it's still $70 minimally too high, maybe more. I mean, the thing is trading at 140 times, you know, book or whatever, or not even revenues. The numbers are so high, and this thing is a
They're saying
government.
it's the most. They're saying it's the most overvalued stock of all time.
That could be true. Um, but they love it, and no one is going to sell no matter what. So, and you got guys like Jim Cramer who didn't like it at 5, 10, 15, 20, 30, 40, 50, 70, 90. And he literally said at 9 to get out of it. It's the worst. And then he comes on and the stock's 180, and he thinks like momentum is going to take it to 200. And then when it doesn't get to 200 and comes in 50, he's like, oh, I think you should get out. So you have the cheerleading base, cheerleading these overvalued companies. And, as long as the market doesn't implode, it's all okay. Um, a lot to talk about today. Let's talk a little bit for a second. Your favorite, Bitcoin. Um,
That was the tell
Interesting.
last night. That was the tell last night that the futures probably aren't going to hold.
I don't know. Well, Bitcoin was at 14.8 and the futures are up 10 handles. So I don't know. And now it's at 15.1 and they're down 10 handles. So 8 handles. I don't know. Maybe. Um, I don't really think, Bitcoin is running the S&P futures market, but I'll give it to you. It is. I'll let you, I'll let you have it. So, I guess, you know,
Thank you.
um, and like it's interesting. It's funny. I have a big position short oil that has been
Why
working.
are you sure? That one I'm very curious about.
Why? Because okay, I have two real reasons. One is that the government wants oil lower. He's unhappy at a 62. So they're going to press on this. They're going to press on the Saudis. They're going to press on Russia. They'll press on everyone because he wants oil lower. Okay, Trump. Okay, that's number one. And number two, which is an interesting you know, thought, and I believe this. I think we're in the beginning of a recession. I know no one sees it, but I think we're in the beginning of a major slowdown here, both on the hiring side and on the manufacturing business side. And I think it's coming from tariffs. I really do. I think tariffs are having a much bigger effect on the market than people think right now. I think like I know business owners, they don't know how to run their businesses. How are you hiring people if you don't know where your tariff rate is or what's going on? Like there were crazy things like I think it was Friday or over the weekend, Trump wants to tariff chips 1,500%. I mean, these numbers are insane. So how do you run? Honestly, let's look at it. How do you run your business? Tell me how you run your business if you don't know what the tariff rates are or what's going to happen. And the thing is, his whole thing with this, the original plan was to have everything made in America, right? that hasn't even come to being. All he's doing is tariffing countries for importing goods, and he knows that no one could make anything here. It would take years to get factories built here, et cetera, et cetera. So I think all the plans are off the board, and the market, the market is ignoring really bad stuff. Back to the PPI.
They're ignoring it. They're ignoring it because they don't see it yet. Here's a report from Goldman. Their preliminary estimates suggest that more than half of tariff costs have been absorbed by U.S. businesses, but that's going to go down to 8% over the next several months, and that's when it's going to hit the consumers, and that's what we've been saying. And they are going to see it in the data. They just don't see it yet.
Well, then how can they, how and why, back to, you know, Fed and Trump, how is Trump pushing on the Fed for rate cuts, okay, when, he doesn't he doesn't even basically understand what's going on. And the question is, what is a quarter
Maybe
point?
he's Maybe he sees the slowdown. Maybe they internally kind of know that at some point the consumer's going to get hit with these,
But
and they want.
a quarter
That's
point,
why he calls Powell too late. By the time Powell sees it, it's too
a
late.
quarter
So
point rate
maybe that
cut is nothing. It's a zero
they
quarter.
want more than that. They want like 150 basis points.
I want 250 or 300. Why don't they take it to zero? I mean, come on. It's doesn't make sense. It doesn't make sense. The housing market has been humming. I know it's looking a little bit like it's coming in decently here, especially any areas outside of Florida for the most part have been coming in hard. California's coming in hard. New York, Connecticut coming in. Manhattan will be a disaster after this election in November in fact, it goes the
Well,
way it
Don,
looks. If it goes the way it looks, but here's the true question: do you think if rates go down a point, that's going to spur crazy housing growth? I mean, I don't know. I have kids in the age of buying houses, and they're paying six, plus percent. If they got five, they're still buying the same house. So I don't know what I think he wants it for debt service potentially. I'm not exactly
yeah,
sure why.
yeah, you're right. That's exactly it.
Right, but
That's
isn't
exactly.
doesn't that worry people out there that they put tariffs in basically to try to chip away at the debt? Now he wants lower rates so he can refinance debt at lower prices. And
Well, he's
literally,
also assuming he's also assuming that the world is always going to have demand for U.S. debt at any interest rate. And
I
what we
listen,
saw
I don't
earlier
I
in the
don't see how they think that. I mean, everybody's been out of the market. China's a net seller. They want out. Europe isn't buying. No. And the thing is, there are alternatives now.
imagine interest rates even lower. That disincentivizes them to continue to roll their positions
Yeah, but
forward.
only way interest rates are going lower is if people buy the rates. It doesn't, listen, you could lower. What's very interesting here, and this is something that you probably, maybe you've seen it, but they could lower rates and actually have the 10 and 30-year rates go straight up. Okay.
We've seen that during Fed meetings, they cut rates, and that same day, interest rates would go
Yeah,
up.
but that's just a one-day thing. I mean, that's basically a steepening of the curve, and that's normalization, and that's really what I think the Fed wants. Like let's say they want Fed funds at 3.5, but they want the 10 and 30-year at 5, 4.5, 5. Like that's like when I started trading in the 80s, rates were in the 4, 5, and the 10-year was 8.5. 30-year was 9, almost 10. And that yield curve is flattened and inverted over the last 30 years. And that's not normalized action. And that's not what they want. And what happens is every time there's a bubble and every time there's a market sell off, you know what happens? Basically, they're buying the longest end of the curve and they're flattening the curve, and the curve is inverting. I mean, you know that we've talked about it many times over the last bunch of years. 10s to 30s, have been inverted. 20-year bonds were having a
Yeah,
higher.
they're not inverted. They're not inverted right now.
Obviously, they're not inverted. They're, listen, out on the curve, it's kind of flat, 20s to 30s. 10s are back to 331. No, it's not inverted, but listen, I've traded a really long time and I've traded a lot of bonds in my day. Okay. And I've looked at this Bloomberg for so many years, and I'm looking now and we got a flattish yield curve. Okay. The two
Well,
year.
it's been steadily rising
Eric,
over the last.
slowly, but I'm telling you, a normalized yield curve has a 2 year at 375 and a 10-year at 5. I mean, we're not there, but there's a big spread. Listen, why shouldn't there be? The bottom line is you're holding debt paper for an extra 8 years. You should be paid for that,
You know
But
what? I'm starting to think that a flattening yield curve is the biggest contrarian macro bet you can make right now.
really, maybe,
Hmm.
maybe.
And I kind of like it. I mean, everything's pointing to that trade, right? Everybody wants to be long bonds. Nobody thinks rates are going up because everybody's pricing in a lower Fed. But even if they cut rates, I think rates could still go up. I mean, we're going to see that. I just pulled up that chart from Goldman. I mean, all that stuff is going to seep into the CPI at some point. We just haven't seen it yet because they've been hiding it.
I understand. So
Um,
let's say CPI goes up to 3.5 from a 2.9. Okay, 3.3. Okay, what do
yeah,
you
the Fed,
think?
the Fed is going to be scared out of their mind
No way.
at that point.
Dude,
Yeah,
the
they are.
Fed, the Fed.
Because
Listen,
they don't see it coming. They never see it coming
but
for
it
some
doesn't
reason.
matter. This is a political move. What's happening here with the rate cut in September is all political. And you're not, listen, you have Fed governors there, okay, that want to be the Fed chairman, okay? And basically, they're not going against Trump. You've seen vocal Fed, much more vocal to cut rates than you've seen in the past. And that's because it's an audition right now for them to become the next Fed governor. So I'm telling you, whatever CPI is, no matter what happens, they're cutting. Okay. I don't know if they're cutting a quarter or a half. You know, I don't know.
Well, they cut
So
in September, but like you said, that doesn't mean rates won't go up anyway.
I'm not, well, we're just talking right now about short rates. Okay. About what the Fed's going to do. Now, sometimes what happens is there's an extension of the yield curve, okay? A steepening of the yield curve, which is healthy. So you may get the quarter point. Obviously, it's going to be what they say in the meeting, but you could have the 10 and 30 years sell off that and get a steepening yield curve. I don't know, but really, Trump going back at it, with Powell, and basically Trump instilling the fear of God into the Fed. Because listen, Powell is gone for the most part. Obviously, he's been Trump has been told not to make a move, let him serve the term out and move on. And that's what's going to happen here. But you want to know what? Honestly, that basically is in the cards. So now it's on to the next, and it feels to me like the Fed is kowtowing to Trump no matter what. And Powell wasn't. So I think in that meeting, in the last meeting when they had those dissenters, okay, significant dissenters, they wanted to cut because they're on audition to be the next Fed head, even though I think we've discussed this before. I think that appointment's coming from the outside, because he wants to have more control of that person. So that's gonna it, and it might be someone crazy. He could appoint his best friend. Who knows what he's gonna do? Um, can he appoint himself? Maybe he'll appoint himself. Um, he mentioned that, but really, I think with Trump.
Hunter Biden. He'll appoint Hunter Biden.
Exactly. With Trump and the Fed, it's a pure fight, but it's really not the Fed anymore. It's really a fight between Powell and Trump. The Fed around that is kowtowing to Trump, okay, because they want the job, whoever that is, Waller, who they want the job, they want it. So they're gonna say, hey, we need to cut rates. We need to cut rates. It's kind of like almost like a buzzword, but I think there's significant infighting inside the Fed. I think that there's Trump on top of the Fed pushing them to lower rates. And, we're going to have to see how all of that plays out moving forward into this September meeting, which is really a live meeting and really on the table. And I don't think I don't think a higher CPI is going to. You may, but I don't think a higher CPI is going to stop them from cutting rates. So I think rate cut is pretty much certain. I think the odds are down to 80%, but that's still very high odds. And the numbers, you know, listen, the numbers can change that, but really the only number that I think that can change that right now is unemployment, which, who knows, and CPI, which you got to believe is going to be hotter than expected. And if it's not, it's a surprise the other way. So, um, you know, that's, that's what I'm thinking about with Trump and the Fed, and really moving forward, what is going to be here. But, there's a lot of stuff out there that is, talking about the bubble, like we talked about Sam Altman. There are more talking heads right now.
I'm very surprised. I'm very surprised Sam Altman came out with that.
Why? Why does he care? He's so rich it doesn't matter, and
Because he
because he's telling the
he
truth.
directly benefits from all this overvaluation in
But
tech.
he's so rich it doesn't matter. Like when you have $30 billion, what's the difference? You don't have to lie. Listen, it's honestly blatantly obvious. Okay, it's blatantly obvious. All you have to do is put AI in your name, like the stock bullish that came out. Okay, it's, I don't know. No one even knows what it is. It's a stable coin. It's a crypto exchange. I mean, all you have to do is say you're a stable coin and your stock explodes. I mean, this stock has no revenue and it's got a $10 billion valuation. It's crazy, but that's what's out there. And now IPOs are back. The every IPO is going up 100%. There's signs here a big froth. So I would keep an eye on that. Bonds look like let's talk a little global macro. So let's look, dollar's slightly higher. We are long the dollar against the euro. This trade I think it's going back to 114. It's 116.70. I like this trade, but it's taking forever. I'm going to be fully gray by the time that trade works. Same thing in yen. Yen, we're now up on this trade again. Um, we think the yen's going to 150. These are trades that we're looking at, that we actually have on. I think I'm going to put on a long TLT position. It's a way to play the bonds. It's the 20-year. It's between the 10 and the 30. But the problem is there's no premium in the options, and that market doesn't move a lot. So I'm looking for ways to take advantage of a potential lower yield scenario coming into the. I know you think the other way, but I'm thinking a lower yield coming into the meeting. You're knocking me on my short oil trade, which actually has been working. I think there's more to go. I think you're going to see a 50 handle um, in
Well, to me,
oil.
it's like if you're betting. My only thing, it could go to 60. I don't have a big position in oil.
Well, what do
I
you have?
went.
You're long
No,
oil?
I bought, dude. I'm in and out all the time. You know that, but like last night, I bought oil. I'm still long oil. It could go to 60. I don't know. It could. I don't think it will, but to me, that's not even important. The question is like, if you think oil is going down because of economic slowdown, then why not just size up on your S&P shorts?
Because S&P could go up. Oil is, in my mind, much more affected by a slowdown in the world economy than the S&Ps. I think they hit oil. I also think looking at oil, it's listen. I'm just looking at the market, and the market is. I feel like giving this to me. The market is trending lower. Okay, even listen. Hopefully, you hit the bid because it's about to go negative again on the day. Um, the bottom line is, oil doesn't look good, and the way to play this, I'm not playing oil futures. I'm trading USO. Like, we're involved in USO, and I'm selling call spreads at and above the market. Okay, so what that gives me, you're trading oil futures. You can get your head blown off with that. You don't know if oil is going to drop $1 in one split second. I don't play that game. That especially for our subscribers, etc. We don't play that game. So I want to put on a position in options that gives me leeway. We don't start getting hurt till oil goes to 63.50. It's trading at $62. So I'm in a pretty good position now. If 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 that in fact happens, we're going to lose money, but we're doing it with defined risk. Futures are extremely risky, especially oil futures. I'll tell you a funny story. I remember, you probably weren't even trading. I don't remember what year it was. I think it was maybe right after '08 or before '08. Oil rallied $40 in 20 minutes. Okay, you can get your head blown off. Like, this oil has lulled everyone into a false sense of security, where a 60-cent move in futures is a big move. So anyway, you're bullish oil, I'm bearish oil. Okay, I don't know, maybe you'll be bearish it later, who knows? I mean, it's not helping
Right now,
anyone.
I'm bullish.
You're in and out. But does that mean you're in now or out now? What does it mean? I don't even know. Wait, if it ticks down, you're out. If it ticks up, you're in, right? I got it.
Even just one tick. Even just one tick.
I know. It's crazy. So, for
It
our
is.
subscribers out there and people watching this podcast, we're shorted. We think
But
it's a
from a swing, just from a swing, okay, like from not in and out, just from a swing point of view, I don't know. I think risk. I think it's. I still think it's going up a little
but
bit.
you don't have a reason. What's the reason?
All I look at for entries is divergence in calendar spreads, and
Listen to me. I've been trading 40 years. This market looks terrible right now. Looking at this
stock
market does
market or
not look good. Does not look good. Okay. I don't know what's going to happen. I don't know if it's going to be an acceleration down or it's going to be just this slow little grind, but the market doesn't look good right now. It looks like the market's a little bit long. I don't know what the CTA positioning is. Market looks a little bit long, and really the mantra to me looks lower. But listen, that could change at any point, and if it does, we'll stop out. But right now, listen, look at the trade last night. Let's discuss it. We had touchdown Tommy, not realizing futures rolled, thought oil was down a lot. He comes
yeah,
in to
Tommy
our
had a good
chat and
week.
says we're killing it, even though the future was like down a dime. Okay.
Your boy Touchdown had a good week last week. You were happy with him finally.
I don't know about that, but we're on to a new week. We don't look back; we're looking forward. But
Thomas, don't let it get to
but
your
here's
head, man.
I want to talk about the trade last night. Okay, and the trade last night was oil opened lower. It bounced. It went a little bit higher, not a lot. These are not big moves, and now it's back trending negative. I don't know what you're seeing in this market that's telling you at 62, which is the lows of the move, why it looks good. I don't
Here's
see
the
how
other
it looks.
thing. I think a lot of here's the other thing. Here's why I actually got long because I mean I'm not seeing a case for
I don't
short.
understand. You say you're long, but you're. Why don't you tell us what you're doing? like you're long. When are you getting out?
I'm long
Where's
a
your
decent.
stop out? Where's your out? Never.
I haven't decided.
Oh,
I
okay.
haven't
Well,
decided yet.
listen, one
But
thing I'll tell this is one thing I'll tell our subscribers. You always need a stop. Always. You need to know where you're getting out. So you can't
so
decide where.
I don't when I enter a position, it depends on how long I'm holding it or how long I plan to hold it. But my initial, like if I'm planning to hold it for like 2, 3 days at least, my initial position, I just get in small and I just sit in it.
But how can you do that?
And,
You're
I don't know.
deciding to hold
And
it
then
for
as the
2 or 3
market
days?
develops, I start to,
What if
you
oil
know,
goes to 60 today? What are you going to do?
tip of the cap.
Hmm?
I'll tip my cap to the
It's not a
bears.
tip of the cap. I'm talking, listen,
Not
we're
gonna hurt.
talking about our subscribers, how they should trade and what they should do. And it's bad habits. When you put a trade on, whether
Bad
it
habit.
listen, even on a quick scalp and
Druckenmiller does the same thing when he gets. I'm not comparing myself, but
oh my
he does the
God,
same thing. He gets into a position. He'll put on something just to get in, and then he'll figure out the stops.
I doubt it. I doubt it. Okay.
What do you
I
do?
mean, literally, and you can't,
So
anyone
you
who's
get into
on,
every trade you get
listen,
into. Every trade you get into, you know exactly where your stops are.
yes.
Right at.
If I'm trading futures, which I don't trade a lot of futures anymore, but when I traded futures, absolutely, because you don't understand. Oil could go from 62 to 60 in
Perfectly
13
understand.
seconds. I want to make sure that my risk is covered. For you, you're like, oh, I'm going to wait 2 days or 3 days. You might not be able to wait 2 or 3 days. That's why if you have a stop in at 61 and a half, you don't deserve to hold that position. If you're wrong, the market's telling you you're wrong, you got to stop out. Now you can get back in. I mean, that's up to you. But especially when you're trading futures, you don't know what can happen here. This thing could drop 70 cents. I mean,
I will
oil,
tell you.
any of our subscribers that have traded oil, okay, especially oil futures knows, okay, and I've traded millions of contracts, okay? Millions, okay? You could get your head blown off, okay? Very quickly. So we always want to use stops. I don't want to really get into it, but when you say,
I will
"Oh, you're calm and you're going to hold this trade for 2 or 3 days," how can you hold this trade for 2 or 3 days? How do you know it could be 58 in 2 days? You don't know where it could go. It could go to 65. But the beauty of what I do, okay, is I've defined risk strategies. Okay, you're trading gunslinging futures with no stops. Okay.
with an option wrapper, but okay.
You have an option wrapper in oil. Okay,
Not in oil, but
right, not in oil. Okay.
yes.
Dude, well, as we speak, oil just dropped 50 cents. Okay.
Nice.
So, no, it's not anything, but I'm not understanding what I'm saying to you is I don't understand how like listen, this when you're trading futures in my mind, okay, and I've traded, you know, probably I used to trade 100,000 S&Ps a day personally. I was probably 4% of the full volume in S&P futures at one point in time. Okay. Now, if I traded that size, I'd be like 12%. I mean, there's nothing going on out there. We used to trade really big size, but we always knew what our risk is. It's very important when you go into a trade, especially when you start, to know your risk. Okay. And listen, as a trader, the hardest thing to do is to take a loss. Okay. Once you can do that, then you've conquered the system, you know. So, I don't want to beat on what you're saying, but you don't in oil futures, you don't have 2 or 3 days time. You don't know what's going to happen today. What if it drops $2 today? Then you have no time, right? What time do you have then?
Larry, if it drops $2, it's not going to have a material effect on my book.
Well, then why do you have the trade on? It's not going to have. If you're right, it won't have a material effect either. And so what? I don't understand. What I'm saying to
If
you is
I'm right, I'm going to add to it. You know how it works.
okay, okay. And if you're wrong, you're just going to sit in it.
I'm going to sit in it forever.
Hey, here we go.
I'm
All right.
kidding. No,
Well, listen, you're
and I want to, but
okay,
you know
but
how it is.
no, but listen, we're coming on this podcast. I'm trying to teach, show people about the market, show people the right ways to trade, the ways to take your
Is there one
position.
right way to trade? I think that there are certain
Oh yeah, there's
principles.
a and it's not trading. It's called risk management. That's trading.
Yes,
That's
that's the
the only
number
thing you
one thing.
need to know. We were talking before we got on
I've
the air.
come
I
to
was
learn
talking.
that that's true.
Well, before we got on the air, I was talking to Lance, who works with us intimately and is trading and doing a great job. But the hardest thing to do is to understand how to use your P&L, positive P&L, to get bigger, take more risk, and have the ability to have outsized returns. And that's the key to becoming a great trader. And if you listen to other great traders, they'll tell you that. Like literally, most great traders could trade anything. They could trade garbage on the street. It doesn't matter. It's the risk management component of that makes someone a great trader. It's not, listen, I don't know where the S&P is going today. Okay? I have zero. Listen, I have an opinion, I have thoughts, but the S&P is the only one that knows where it's going. So we've got to operate around that and make sure that, we're able to make money around that. And as we're doing better, we're getting bigger and bigger and bigger. And then once you really hit it, listen, that's the only way to grow. Like the only way to grow, like our subscribers, they start trading one contract in options, which is great. All right. They risk 300, 500, $250. And we do that over and over. And then all of a sudden their account has 5,000 off of $300. Okay. Now they're not doing one contract anymore. They're doing two or three. Now they're unstoppable, and, when it doesn't go well, then we pair back to one contract. But really, trading is about risk management and money management. And when you say in oil, you know your position isn't impactful and you don't care, you got to care about everything. It's just part of a, yes, maybe you have a, one contract or a I don't know what you have, but whatever it is, you want to win on everything. And we're trying to give strategies that sort of make sense. And I'm of the auspice. Okay, now listen, if you're quickly scalping futures, which I don't recommend to anyone here to do. You have to be a full out professional to,
Yeah.
buy oil, sell oil, make 8 cents, make 4 cents. I made a living like that for 15 years, maybe more, scalping futures every day. Buy them here, sell them there, buy them here, sell. That game's over. So, but if you're trying to do that, you know, you don't really have to have a I would suggest putting a physical stop in, but you don't have to. But any position that you think you're having for a day, 2 days, 3 days, you got to have a stop in. What if it just keeps going lower and lower and lower? Then your insignificant loss turns into a major loss, right? I mean,
Well, I usually do put in those stop. I just haven't decided what that stop is right now. I mean, it looks like it should be 62 or below
it's
62.
it's 62 now, dude. It's lower than 60. It's in the 61 handle again. It's
Yeah,
going.
still looking at the September contract. You know.
Okay. Okay. I'm looking at crude because that's what pricing USO on
Well,
that.
whatever it is, it's going to be August 13th low. You know, whatever that is. Let's
I
see.
mean, I don't see anything bullish here. But anyway, we're spending too much time on oil. Let's talk. We talked bonds, opened
But
higher.
the other thing, one more thing about oil. The other thing, I think a lot of people, I think you included, went into the weekend short oil because they thought somehow there was going to be some sort of trade deal with Russia and the U.S. was going to be buying Russian oil somehow. Okay, so
I
none of
thought
that
they were
happened.
going to get. I thought they were going to get free oil, but that wasn't the reason why.
Even
The
better, you know.
reason why I went home short over the weekend was I was short into Friday, and my thought was this: okay, if nothing came out, the market wouldn't trade higher. But if something came out, it would be 2.5 lower. And to me, the risk reward on that trade, which it ends up being because oil's lower and nothing really came out, that what if something came out and they said, oh, we're going to send oil to the United States? Oil would probably be $1.50 lower, maybe more.
Right.
So, and now, like you just said,
But it didn't
nothing.
happen, right? So I look at that, I'm like,
Right,
okay,
nothing
well,
happened and the market's lower. That's telling me the market is weak and wants to go lower. If nothing happened and they were looking for something to happen and the market was higher, yeah, then you freak out. But think about what you just said. Nothing happened, right? With oil that impacted oil and the market's lower. So why is that
yeah,
giving
but
me?
now everybody that went into that trade thinking that we're going to get free oil is in it for absolutely no reason,
What are
which
you
means
talking
they
about? I'm in it because I think the market looks bad and I think it's going lower. And what's letting me stay in it, which is the most important thing to anyone trading out there, is price. And price is lower. So why do I have to get out? I don't have to get out. And if it goes lower, I'm adding. I'm not getting out. I'm adding. I'm going to put it in their eye, as we used to say. I'm going to stick it in their eye. Okay.
I
If they
hear that.
want to
Hear that.
buy more. So
To
the
me,
market.
the premise to me the premise was wrong, and that means that
But
maybe
price is right.
a lot of the
What does the
guys
premise
right,
have
but
to
I'm,
do with
I'm
it?
anticipating I'm anticipating short covering based on that notion.
Well, wouldn't there have already been short covering? Why?
Maybe
What are
there
they
always
waiting
was.
for 2 days to
You're
short cover an announcement that happened over the weekend? I mean, price is telling you this wants to go lower. Now, how much lower? I don't know, but it's telling me it wants to go lower. And if it goes a little bit lower, we're going to add and get shorter. So like you're right. Maybe people went in short to the weekend. It doesn't feel like that because like you said there was no short covering here. Okay? So maybe people aren't shorted. That's number 1. And number 2, the price action is why would they short cover? If the market they can short cover right now and make money. They're not even why would a short covering would be someone that had a cover at 63 or up 70 cents. The short cover never happened. So to me, looking at the market, it just seems weak. I don't know where it's going, but it seems weak. But I think it's going below 60. I think they want a 50 handle print. Okay. So we'll see what happens. And that may take a little bit of time, or it may be this afternoon or tomorrow. But I don't want to talk about oil because we overcovered it. We talked a little bit about bonds. Bonds were up overnight. They can't hold the gains. Yield at 431. It's weird. We keep coming back to this. 48. It's like a ping pong ball. 418, 440, 418, 440. So one of these sides is going to be broken. Maybe it's the 440, which would be really scary for the market. Equities. They've tried to rally the S&P 5 times this morning. It's down 6 full handles. They're calling the Air National Guard in because they're having another 2 down days in a row. Dow's up today, so that probably means sell Nasdaq, buy Dow until they unroll that, and then buy
United Healthcare up again, pre-market 2.5%. Everybody's bullish on this now. Everybody.
which one?
United Healthcare.
Yeah, well, listen, look at a chart. Pull a chart on
Pushing
it. Pull a
Dow
chart.
up.
Pull a chart on it. The thing imploded. So it bounced, 20%. It went down 65, and
Well,
now
Buffett's team got in. All these hedge funds are getting in. All these retail. The hedge funds and retail are on the same side. The problem is hedge funds know how to take a profit. Retail does not.
yeah,
So I worry.
I don't.
I worry.
I mean, I don't know. It's
Here's
up.
the chart.
It's up
Here's the chart.
3%. I mean, I actually probably would short this name. It's
Yeah, I
probably
was
got a
thinking
little
just
bit.
because of
It's probably got a little
everybody's
bit.
getting into.
Well, it's got a little bit more to go, probably, but overall, that stock got hammered. Look at that chart. I mean, so maybe
Yeah,
another $20. Look to short it for a trade. overall,
What
you're,
would you do here? I think a lot of people have this on their radar right now. United Healthcare.
I
The
don't know.
cat is out of the
I
right. The
think,
cat is out of the
yeah, but I think they have long-term issues. I think it's a very hard growth industry. I think they bought it as a value play. It's a full value play. And I think they have trouble. So there's going to be an area here where they're it's going to top out. So I'm going to look at some options on the short side there. It may be a little bit too early. It's only the second day of this, so maybe wait a couple of days. But hopefully we get some good trading in S&P. There's no volume again, down small. um, you know uh, look to trade it.
What do you think of that future session in the S&P last night? We opened up, right? Then you had drift all the way into like, the midnight hour. And then it slowly started to come in. Europe opens up, by the way, down. Bitcoin was down all night. And the futures came all the way back down. So what I noticed before any sizable market drop, and I think we're due, even just from a seasonal point of view, I think we're due. You tend to see like the future session up and it completely reverses. You putting in any stock into that for today's action or no?
Nah, I don't think. I think the market basically was up, um, and I think Europe came in light. Europe is down across the board small, anywhere from 50 basis points to less than that, and then 75 basis points. So the market sold off of that. I think the market has an insatiable appetite to go higher. So they're going to try, what are we down? We're 10 minutes before the opening, we're down five handles. I mean, it's a zero trade. So I don't know. I mean, I think the names that are bubbly, that are especially bubbly, will still be able to support those, the Palantirs of the world. I think you're going to see Palantir under 150, maybe even lower than that. And that only takes us back to their earnings. So I'm just shocked that no analyst has come out negative on that name or saying that. It's amazing. I feel like they're all holding hands on all these stocks and like letting the bubble inflate. And, you know, I just don't know. So maybe today's quiet. I sold the straddle for tomorrow, actually, for one of my products. Got like $37 for it. It's probably maybe too low for today, but I like it. And then what I do around that is I buy wings, so 50 lower. So the max losses are $15 on this. So it's lose 15 to make 37. We're not going to make 37 because you'd have to hit it exactly. But doing that. But overall, numbers coming out this week. You got building permits, housing starts, minutes of the Fed this week, and then on Wednesday, and then you got jobless claims, etc. Um, I'm assuming a quiet week. It's the second to last week of the summer, but maybe people are going to want to sell in front of Labor Day when people get back to work. Everyone will be back at that point. I think a lot of people are back now, especially down in South Florida and across the country. Really, the Northeast schools are the only schools that haven't started yet. So you're going to start seeing that, and maybe people get ahead of it. But today, looks extremely quiet. You have the Dow up, Nasdaq down small. You're talking 10 basis points. So quiet opening. We're about 10 minutes out, so I want to wrap, but really, keep an eye on oil. I think lower. Hope you don't get stopped out today. But My next one that I'm looking at is also probably the opposite of you. I'm looking to short gold. I'm not aggressive yet. I want it to come in another 25, and then I think we might have a leg lower. But anyway, I don't know if you want to wrap us, but I'm pretty good, and quiet day all around, and we'll see what happens.
Yeah, I think look, the market had two inflation reports to look through last week. I always say the real reaction to these economic reports comes later, and this week is going to be important. I think the macro picture that was painted last week with that producer price index showing that producers are hiding a lot of costs. Goldman came out with that report. I think the market, if it takes out the low from the producer price index, which is not a lot at this point, it's maybe like 15 points. I think it could
Uh,
actually trigger some selling. We're due for some seasonal selling here at this point in August. So at some point this week, I think we're going to have a pretty nice red candle.
you
Maybe
think?
it's, I think so. Yeah.
I hope so, but I'm
You
not.
don't sound nearly as bearish as you should, which is making me very bearish.
Good. I listen. We're gonna leave it at this. I'm trading from the short side. Okay, I don't have to like jump up and down. I jumped up and down, and we rallied, being very quiet. You know what my beliefs are on this podcast. We're here to protect our subscribers and people watching this podcast. Okay, from hurting themselves and being over exuberant. But you know, literally when Sam Altman comes out today and says that, it's very negative. Why would he say that? It makes no sense other than the fact that it's the truth. And I'll leave it at that. Remember, the truth will set you free. Anyway, everyone have good luck trading today. Expect, fairly quiet. Hopefully, it won't be. Remember to press on oil a little bit. If it trades lower, we're going to add to the position at about 61.20 on the downside to press through 60. I wish everyone a great trading day and enjoy. Peace.